If you're looking to take advantage of potential trading opportunities or protect your investments in a rapidly moving market, conditional orders can be an effective trading and risk management tool. These orders trigger buy and sell trades automatically under conditions set by you. This means that you can lock in potential gains or minimize losses even if you're not watching the market. Conditional orders can help you take the emotion out of trading, as well as help you stay on course with your trading strategy. So, let's run through how to place a conditional order. Start by logging into your account. To place an order, the Conditional tab is on the left-hand toolbar, the fourth tab down. There are two parts to the Conditional order pad. The first is Trigger Order Conditions. A trigger condition can be on equities, exchange-traded funds, interest rate securities, or warrants. You can set the trigger condition to be based on a different stock other than the one you wish to trade. This is referred to as a cross-stock trigger. For this example, let's use BHP Billiton. The first thing you must decide is the trigger condition price. So, either set a limit price or a conditional trailing order. For this first example, let's use a price limit. In the case of a price limit order, the security must hit this price before an order is created and sent to the market. So, in this case, when BHP trades less than or equal to $46, the order will be triggered and entered into the market. In addition to the price trigger, there are also two optional trigger conditions: volume and time. With volume, you can nominate a specified volume of stock prior to the order being triggered. If you set the additional volume trigger, the conditions you set above will only be valid once the volume you specify has been traded. With time, you can set a specific start and finish time, so that the conditions you set above will only be valid during these specified hours, such as between 3 p.m. and 4 p.m. You also need to make sure you specify an expiry date. For example, you can set the trigger conditions to expire in a period of time such as 3 months, or on a specific date, such as 19 May 2023. Then you're going to come to the second part of the order pad, the order itself. You must first choose what stock you wish to buy or sell under these conditions, and at what quantity and price. For this example, we will use Rio Tinto. We will choose to sell 100 shares at a limit price of $120. As you can see, you are able to put a trigger on one stock and an order on another, or a cross-stock trigger, giving you more flexibility in your trading strategy. Finally, choose how long the order will be valid for once it is triggered. We'll choose 20 trading days. Once you click Next, you'll be asked to verify the order and enter your trading PIN. To summarize this example, we have created a conditional order where if the last traded price of BHP falls to or below $46, then your order will be triggered and placed into the market. The other type of conditional order you can place is a conditional trailing order. With the trailing feature, the order is no longer fixed, but rather trails the price by a certain amount, usually expressed as a percentage that you specify. This is a really smart way to lock in profits or prevent excessive losses. For this order, you would select the security, select the trailing percentage price condition, and then select whether the percentage trail is based on the previous day's open, high, low, or close price. Finally, select whether it's less than or greater than, and then the percentage amount itself. The trigger price is recalculated daily and will follow the share price only if it moves up. If the share price falls, the trigger price will be retained. You can then go ahead and fill out the other details as we did before. For this example, we'll use BHP again. So, what this means for this example is that as the price of BHP falls below 5% of the previous day's closing price, your order will trigger and be entered into the market to sell 100 shares in Rio Tinto at a limit price, or no less than $114, and the order will be valid for 20 days, if the trigger conditions are met and the order is triggered. As BHP's share price keeps moving up, your trigger price adjusts accordingly. This means that you'll be able to minimize your losses should the price continue to fall. And that's how to make the most of conditional orders when you trade with HSBC Invest.